But no, thanks for joining us early this morning. This will be our icebreaker panel session. It's a pleasure to be up here with two executives that I consider friends to not only LSI, but to the industry. So why don't we do like super brief bios? We'll start with Amir, we'll go to Tal, and then we'll just jump into some questions. And if you guys are up for it, I think we can make this open. So if there's questions, we'll get into it. Amir?
Yeah, I'm a former entrepreneur. Started a company called Spinalign, which was for 3D navigation for scoliosis surgery. Spun that out of Hopkins Biodesign program, and then exited to a public orthopedic company. And then after being with them, leading a digital surgery effort, went back to the West Coast where I grew up and started Solardis Health Ventures, which is a medical device-focused micro VC. Pleasure to be here, and thank you, Scott and Henry and the whole team for organizing this.
Thanks, Amir. So I'm Tal Wenderow. As Amir mentioned, started a company back in Israel, robotic, called Corindus. Ended up selling that to Siemens after we got public. Currently a venture partner in Genesis, which is a medical device company looking to investment M&A. Also could not take the bug out of me, so went back to do a CEO gig. And on the third hat, besides being what I call a friend of LSI and trying to promote and help, is also trying to put a new investment vehicle.
That's great. Okay, so I thought we would start it out with the question that's on everybody's mind, and I'm hearing different opinions as if I talk to three people, I get three versions of the same answer. Let's flash back 1 year ago, approximately. We're in Barcelona at an event just like this. We have a house full of innovators, investors, strategics, all trying to achieve the same goals. And we'll start with Amir. Is the current climate for capital raising better, worse, or the same? And give us some examples for why you feel that way.
I definitely feel like it's still has its limitations, and it's not fully rampant, but the environment definitely feels a lot better. More regular closes that I'm seeing. I think the companies have really taken the medicine, have really tried to adapt, adjust their plans, change their fundraising strategies. So I think the environment definitely feels a lot healthier than it was 12 months ago, which is exciting for all of us. And the M&A activity has continued to increase in its momentum, so I think that always helps.
Yeah, I will say it depends which stage you are. So I think for late stage, when you're doing a PMA, a pivotal, you see those big rounds of 40, 60, $100 million. My concern is the early stage funnel, early stage innovation. There's not a lot of money there. The VC almost out from that early stage. And you see the private equity going into those late stage because they need to come early. So I think it's better. You see M&A, but strategics are willing to purchase and buy, but more established companies. So you see much more larger M&A. Less on those tuck-in $30, $40, $50 million, which, in my opinion, are one of the best sometimes. So it's a mixed bag.
Okay, and a follow-up to that. So you've sat on multiple sides of the table. You've both been operators, had exits, and you now invest in companies. And who knows, maybe you'll go back to the other side at a future point in your careers. But help us get into the minds of the investors that are here. What are they thinking this week? What are they looking for? What do they want to receive? What kind of communication? Help us get in the minds of the investors that are at this event.
I should start?
Yeah. And you can be very candid with us.
Yeah. It's a small group, and Henry's not quoting me, so
yeah, we'll edit anything out that you don't approve of.
So I think first, as cliche as it sounds, people invest in people. And people need that, meaning what I like, again, here, is that connection, because I have a lot of friends in the industry, and probably, and you know the feeling, 95% of them said no to me at least once, if not twice or 3 times.
Yep.
And in the end of the day, when you deploy your money, whether it's your own money, your fund money, your strategic money, you want to make sure that the person around the other side will be your partner and trust you, and you trust him. So I think people invest in people. That's number one. Number two, it's one of the things I learned moving from a startup to Genesis, which is not a big strategic, but a growing, is the importance of momentum and portfolio management. So you can have a product that is better than the product that Stryker, Medtronic, or anyone else is holding, but it doesn't matter because they spend so much capital, not just financial capital within the company to promote that. They will not abandon that. So I think understanding the other side, how they think, is important.
Yeah, I couldn't agree more. You know, been rejected thousands of times, and
I was generous.
mostly by Tal. And so many of the strongest supporters in the end were people who started out with, hey, it's not the right time. I don't think this is, you know, the right time, but, you know, keep me updated. And those who actually follow up on the keep me updated, they stay humble about it. You know, they're really doing their homework to get feedback at any stage and try to always perfect their craft. I think those entrepreneurs always tend to succeed. I was just, you know, after a few LSIs, and you start seeing so many familiar faces, and I think that's part of the beauty of this community where, you know, I was meeting some folks last night, which weren't a perfect fund for us, but I keep seeing them improve, follow up with updates. They're actually hitting their milestones. They're, you know, inching towards where they need to be, and they listen to feedback. I'm eager to help them, whether it's through our vehicles or helping them connect with, you know, warm intros to other VCs that might be a better fit.
Yeah.
And I think that's a really important part that entrepreneurs need to remember. It's all relationship based, and there's almost sometimes there's nothing better than a VC saying, "Hey, Amir, this company and this entrepreneur is amazing. They've been knocking at my door for a year, 2 years, and it's not a perfect fit for us, but I think now they're at a really good time. It might be a perfect fit for you." That's generally like a very productive conversation that ends up going somewhere. So I think that's kind of the most fresh advice from last night that kind of rang true.
Yeah, and I think I couldn't agree more. Josh made a comment last night about just sort of the culture of our community, and that's that people want to help each other. Right. There's a feeling that I think we all have after these events, which is a little bit of exhaustion, but also even more hope and inspiration because of that culture that I hope that we've created and we continue to build on. It is a tricky time for some companies or in a really critical situation. Keeping the operator hats on in this part of the conversation, any advice you have for those companies that are trying to really survive through this next period? Any things beyond the obvious that you would be thinking about as an operator?
I think I can share what we say on when we boarded last night, Monday night, Sunday night, whatever it was, from Boston.
I forget which day.
Prior to
is listen, right? Which is, I remember myself, you think you know everything, but you don't. And I think it's obvious what you need to do, right? Get the prototype, GLP, animals, clinical trial, whatever it is, but listening to people that have been there, and because what you think are the value inflection milestones are not necessarily what the investor thinks or what the strategic thinks. And how to get there, there's several ways and contingency plans. So my best advice is just listen and get advice and get on the board someone that is an operator, not an investor. So you can call him and say, what do you think and how do you strategize about that? And not just have the board full of investors that are only looking to advance the company, but also protect their investments.
Yeah, I couldn't agree more. I feel like the best moments for me as an operator were moments where I assumed I didn't know something and I learned something from someone more experienced or had a different perspective, someone smarter than me. And that always helped me get that next inch forward. And I was thinking about this a lot this morning, kind of how I was talking to an entrepreneur and they're asking what type of person do you look for? And I was trying to think of a phrase that was clever, but it's basically like, I kind of want a gracious loser that's a very sore winner. And what that kind of goes by is be super humble. You can have confidence, and it's not like you have to assume you know nothing. But really go seek people's feedback, seek people that will tell you why your plan sucks. At least try to push them to poke holes in it, and really challenge you, make you better, learn from others, other entrepreneurs, strategics, investors. The worst thing you can do is not talk to people. Because eventually, if you just stay in your bubble or stay with people who are constantly supporting you, you're probably missing the mark. So yeah, that's kind of my best advice.
Okay. And keeping the investor hat on, let's shift maybe to even a more practical question here. And I cannot tell you how many times I speak with entrepreneurs, CEOs, and founders that are trying to navigate an event like this. They want to get access to the right investors. They want to maximize the time while they're here. And not all of them have the luxury of warm intros or built-in networks. And this week is a big critical week for them. What is the best way? And I know there's no silver bullet, but what are some of the things, some of the advice you would give them to maybe to do and maybe not do as they approach a week like this?
You want to start?
Yeah, I mean, I think at my first LSI, I spent more time on the East Coast, and that was my first event. And I knew some people, but definitely not everyone. And now, every LSI, it's added more and more. I feel like always just start small. Say hi to the person next to you. You never know, where they're from, what company they work at, what do they do, who do they know. I feel like all my interesting LSI connections were some random interaction that was at the, coffee table that then ended up being some other connection. We had something in common, even not work related. And then that ended up kind of building a relationship. So definitely just start small. Don't be afraid to talk to people. Definitely don't overpitch. I think one of the best pieces of advice I ever got was always focus on the relationship and how to get the next meeting, as opposed to saying, we have 3 minutes in this hallway, I'm going to throw you the kitchen sink and hope it works. That often doesn't, even if your startup is Google. So I think, just really walk before you run, and that the momentum will build with some time.
I don't want to say I completely agree with you because you used that line, but I will summarize it. Don't make it transactional, right? Meaning, I think when you look on the numbers, and I switched a couple of years ago, so I see all the requests as an investor to meet. There's a lot, right? And there's a limit of how many companies you meet. But the key point is in my opinion, one is do your homework, meaning go to the app or the website before that, who is attending, look on their portfolio, see who did they invest, who their connection, how do you get connected to them, really look at that analytically. And then when you come here, use that to make that personal relation. Right. And definitely do not pitch, meaning if you think, and again, we don't have a big fund, we're investing a little bit, but if I come and every time someone will pitch, I'll just walk around and say, Scott, what do you think about the Red Sox last night? Which I hate watching the Red Sox. Because you don't want to be pitched. In the end of the day, we're all coming here also to have fun, right, in advance. So it's that personal connection, whether you were someone in college, we're a different company, you both love basketball, bikes, whatever, find that hook and use that. I think it's so important more than pitch, because if you, again, put an investor hat, fast forward next Monday, the inbox is like 100 emails, right? And you have to start sorting through. You're going to pick the one that you memorize and remember and you had the connection with, and not about what their product do. That's secondary.
Are you guys, do you guys go outbound? Do you guys filter and go outbound, or are you waiting? I'm curious.
Both.
And how do you do it? What's your process for? Is it as simple as I go through the list and I'm looking for companies that are entering? What's the process for that CEO that gets a request from you to them?
Yeah, I feel like I review all the requests because it's always ironic when you're the entrepreneur, you're sending out 600 requests. When you're the investor, you're getting all those requests. So I try to read through them, find whoever might be a fit, try to respond to those that aren't. And then I always read the list, at least the blurb on what every company does. And then I really like just sitting in the back of pitches because sometimes something may sound interesting, but you're not sure if it has that spark yet. And sometimes during that pitch, you can get a better sense, oh, that's what they meant. Then I try to reach out to them after that. Yeah. So sometimes, always have that mentality. You don't know who's in the back of the room listening. I feel like half of my investments have come from me being in the back of the room, hearing something that was pretty interesting that I didn't consider before. Yeah.
If you put the strategic hat as Genesis, there's a team that actually analyzes. So I send them the list. They look, these are the companies we want to meet, are interested in the phase and what we do. So then you reach out and schedule meetings. As an investor, you get so many outbounds, you don't have time to look. Yeah. Unless it's come, Amir, hey, I looked at that company. What do you think about that? Then I'll say, all right, I'll have time. That's the reason going back again, reinforcing that connection, because investors want to work together sometimes. They hate to be in a silo. So it's more inbound than outbound right now.
Have you had the same experience as Amir, where some of the intangibles, the organic, sitting next to somebody at, same experience, different experience? I know that you're very hard to approach, so maybe people are afraid to.
Yeah, I'm really. Unfortunately, I sat next to Amir, so that's one. Yes and no. Meaning it's all circles and community, whether it's my Israeli community, my Corinthians community, my strategic communities, people that actually left and know you and they reach out. Very rare I sat in the back of the bus and listen to something and then get connected. But you never know, right?
Yeah.
And I think going back to companies, unless you have a tuck-in product, a lot of companies actually do pivot during their career and move indication. And then you saw a company in cardiology, and then suddenly, oh, you know what? If we shift to that, we can do lung cancer for the same technology. That's interesting because you already have a pivot and an asset that you can reassess and deploy. So,
follow-up question. So this is our 8th meeting, 3rd year in Europe. It'll be our 6th meeting in our US meeting. You both have been attending regularly. Are there companies that you may have seen a few years ago that were interesting but not ready, that may be getting closer? Are there any examples like that? Or, I mean, Amir, you talked about, not a good fit for you now, but maybe for somebody else. But what about not a good fit for you then, but maybe down the road, or are we too early in the cycle with this community?
Yeah, no, I already feel that way about a handful of startups from my first LSI till now. Night and day difference. They've achieved so much. They were very early then, not to their fault. Or they had fundraising strategies that were, not refined. And then now, you hear them pitch because you already heard them before, and you hear them talking to other people. You catch up with them, and you really see all the progress they've made. I'd say a sizable portion of LSI startups from a few years ago are really progressing.
Especially as they progress through the clinical development and clinical trial, because in the end of the day, it's all, unfortunately, we're in medical device, not in cyber or search, what we'll just discussed. So we actually need some evidence in clinical trials. So as they progress, they reduce the risk and the data looks better. The challenge when the data looks better, you need more money to deploy to do a pivotal, which is 60, 70, $100 million. But yes, you definitely see that progression.
Okay. I'll open it up for questions in a minute, but the first question I asked was, what's the climate right now? Better, same, worse? You guys gave your opinions. What's your forecast? And after they answer these questions, if anybody has questions, let's open it up for a little bit of dialogue here. What's the forecast for the next 12 months?
We are startup guys, so it's not a fair question because we are always optimistic. We're always half full glass. So that's kind of in the DNA.
Yeah.
Because we're being operators, so you always think the positive. So it has to be better.
Yeah.
I'm just concerned about the early stage funnel because the VC are not playing there. I spoke with a family office yesterday from France, and they said less and less they want to invest in early stage and not revenue generation. The family office, so who will fund that early stage innovation? That's my biggest concern. There's a lot of company in the pipeline that strategic will like. So I'm very optimistic, but we need fresh capital, I think, into the field.
Yeah, I totally agree. I think it'll continue to improve. I'm curious if the M&A trend will continue, where you are seeing bigger, more mature deals, because that also shifts the envelope of interest. I think there are still a sizable amount of early deals, pre-FDA, pre-sales, or early sales deals. I think those are really healthy for the ecosystem to balance it out. I think the shockwaves are fantastic for the whole ecosystem, but I think those that are exiting during a pivotal or even pre, that helps every window to be interesting enough to get funded.
I actually don't like the shockwave deal as an operator investor because there's less strategic to buy companies. That's how I see that. So it's more consolidation. There's less strategic. There's a limit of how many deals they can do. And Shockwave just hired Rob Berman, that from LSI as well, that was about to start making acquisition, and now they have a different hat. So it will take time for them.
From the standpoint of the funds, get those returns, they can redeploy.
Yeah.
But if you can balance those with some smaller tuck-in deals, I think that's what will really spur the early investments to keep going. But yeah.
All right. Founders and CEOs, raise your hand if you're a founder or CEO in this room.
Oh, shit.
Okay, let's start with you. Who's got a question for investors who've been operators, please?
And which I have to coach and guide. What I'm wondering, does it make sense for us to spend time on American investors? In other words, I haven't seen many American investors investing in Europe. Can you comment a bit on that?
I think as an investor, you'll invest in the right company no matter where it is, right? And I'm putting my Israeli hat. I was born and raised in Israel and moved to the States 18 years ago. There's a lot of US investment going to Israel. So I think it's more of a question how your product fit the US market and their growth, less the geography. I think there's obviously, as an investor, you want to invest in people that is close to you, not just geographic, but also personally. So they want people in Europe to invest. But the big money, unfortunately, is in the US from a reimbursement and from market growth, and that's what drives the valuation.
Yeah, I think, half of our group's investments were Europe and Israel. So I feel like our condition is that their primary market is the US market, just because it's more known for us. But I think it all depends on the team and how they go about it. So I think there still is a sizable amount of US interest in European and abroad companies.
I mean, there's some limitations sometimes that you have to do a US Delaware corporation and position that. Again, if the thought is going to the US market, you may want to start with a US entity first, with a subsidiary in Netherlands, and then flip it down the road.
Yeah.
Please.
Hi, I'm Roger from MedTeam, doing software as a medical device for spine surgery. And I'm wondering if you have experience with the successful business model for software as a service, like in the medical area, how we sell software and how we make money. Do you have experience with successful company in this area?
Tal's your expert there.
Although your spine is yours. Take Cathwalks as an example. Again, LSI alumni Ramin was here. There are software that does FFR for cath labs, and it's sold as a medical device. So I think I hate to put boxes around it. It's more about what's the value, what clinical outcomes, economic outcomes does the software delivers. Then the answer is yes. If it's just a nice to have and physician just get information that cannot act tangibly, that's hard. So it's all about what the software does more than a general question. And I don't know what you guys are doing specifically.
Yeah, I think it's typically the question ends up being, is the business model making sense? And how does this look in the eyes of, the commercial side or the strategic side, and less so of the software? I think the benefit of software is you can kind of move very quickly in certain domains, but then the issue being, have you achieved the right use case, the right product, and do you have a business model that comes with that? So I think that's typically what I see with the software companies.
Well, Mohammed from Precision Cardiovascular, we run heart failure remote monitoring. Thank you, first of all, for a great kickoff to the day. My question is, as investors, following slightly from Roger's question on boxing, what do you feel about a startup that's looking at other options beyond strategic acquisition, maybe pharma collaboration or B2B data licensing? Are you kind of skeptical when you hear that? Because predecessors may have gone the traditional route of strategic acquisitions. What do you think of someone trying to do that?
I'm definitely not skeptical. I think it's all about, meaning pharma collaboration is amazing. The question, is it sustainable? Is it the one-off, right? So to me, it's a revenue. And if you have a good revenue business, you can find secondary acquirers like private equity. You don't need the strategics. But it's all about, is it sustainable? It can repeat themselves. Meaning pharma has a ton of money. They're paying a lot for clinical trial, for AI, digital twins, and so forth. So if you have that, absolutely.
Yeah, I think it definitely depends on what your strategy is and why you believe that strategy is the right path as opposed to the strategy itself. I think it's very simple to be in the M&A bucket because it's often pretty black and white and it's easy to understand. But if you have a very viable case that is well thought out for licensing deals or collaborations, JVs, I'm sure any good investor would listen to you.
Meaning, I'll even argue that the M&A bucket is more challenging because there's, again, not a lot of strategics. They only buy 3 or 4 a year.
Yeah.
And they're all seeing, think about how many people are here, 750, right? They see all of them and LSI, Danapoint, and others. So there's a limit how much they can do. So to have a path to profitability through collaboration, absolutely.
All right, we're coming down on time unless there's a burning question. One more burning question, then we'll wrap things up.
Thank you. Charles Nduka, MTech Labs. What's the position where a company's developed a foundational technology that has applications both in medical and consumer? How is that viewed by investors? Obviously, we're always told to focus. What would be the position there?
So if I understood correctly, if you have a technology that is applicable to both consumer and medical, what's the position of that?
Yeah, for example, like a PPG sensor, for example, companies that first innovated there, PPG sensors are now in everyday devices, Apple Watch, Fitbit, etc., but also are being used for core medical devices.
Yeah.
If a company had invented such a foundational technology, how would they go to market in a way that satisfied the investors' desire for early revenue, but also the long-term opportunity in health?
It's a very good question, and I'm not sure I have the full answer, but I think if you're a VC, it's hard because they want to put you in a bucket. This is the use case, and that's who is the potential acquirer. So you need a use case for that. It may be more fit to family office or private angels that looking into how do I return 2 or 3x, and I just get to the revenue base, similar to the question before that on the collaboration. Typically in medtech, technology by itself is not good enough, right? You need to see how it goes because of the regulatory aspect of that and who will take that to market. And if the burden is on the other company to take it all the way, 510K PMA, they get the value, not you. So it's not an easy question. You need to understand more.
Yeah, it's definitely difficult already when companies try to go for multiple indications, and sometimes there's really good justifications. I think it becomes exponentially even more challenging to underwrite when they're looking at completely different markets, medical versus consumer. The team expertise is different. The strategy, the cycles, they're all different. So I don't think any investor would ever say no completely, but your strategy definitely has to make a lot of sense. Your focus kind of outline of how we divvy up our time. Is it a subsidiary? Is it kind of on autopilot? Are you splitting your time completely across both? I think the details really matter about how that's being balanced. But yeah, it's a issue I've seen with a lot of startups, and I think it all comes down to what your strategy is.
All right. Well, that's going to wrap it up for this morning. Amir, Tal, thank you very much.
Thanks, folks.
Thank you all for getting up early and being a part of this early session. This was the first pancake. We talk about sometimes the first pancake, you work on it, and the other one's... I think it was a pretty good first pancake. Right? Yeah. So please come by and say hi to the guys, and I hope you have a wonderful rest of the week and it's productive. If there's anything we can do to support you, we're here. Thank you very much.
Thank you.